Good morning. Video morning brief of the U.S. stock market is Tuesday, March 25, 8:47 a.m. Eastern Time, and Rich Posh for Critical Point. Okay, we had a problem yesterday that it looked like the market was topping a little later than we wanted, but overnight the futures went higher anyways. Got a problem with the level 4 swings. It may be that one-third of the scenarios are saying it's just going to go higher, and tomorrow, maybe even the next day, it's in a solid uptrend. At the same time, we can't back that up that there's a lot of money here, that there's a lot of demand. I think some of them were upset that it rallied so much overnight yesterday that they felt like they were left behind. They just didn't want to buy it and pay that much, okay? Now, the next thing we have to consider is that the marketplace also was looking at news of where they think Trump has kind of calmed down a little bit, and they're hopeful the April 2nd tariffs won't have to catch in there quite as much. And then there's technical people, there's bargain hunters. Morgan Stanley, Mike Wilson said, it's time for some bit of a rally here. I think Goldman Sachs said they could see a contrarian rally. They have some kind of contrarian indicator when things could be better for like 3 months or something like that, that it's just time to calm down a bit. So we got some issues here, but currently what the model's doing is moving from right there for level 4 top to there for latest allowed. And then what it's saying is instead of latest allowed yesterday, it would have been ideal to top yesterday. So it's less than ideal, so it's just problematic, but it's saying latest allowed is probably early today. So you could go in trend following mood and say that we're not going to see a pullback into a level 4 bottom until you get a negative bar on this 6-hour chart, but that may be too late. And we may have a level 4 bottom coming up very quickly. That means it's going to another level 4 top, and that's not making much sense at all. That would be problematic. It does feel like people are ready to start that April rally that I've been talking about for quite a while. But yet the model's saying, boy, we might have seen the lowest price put in place. There's a floor now. But really the true bottom ought to be just a bit higher than that and ought to pull back now still for the next level 3. And that would be the better bottom. And even if we're wrong on that, it should still pull back for level 3 anyways. That there ought to be some kind of pullback before going higher. So I'm warning you, I'm running behind on those larger trends. I'll explain in a moment. All right, at any rate, I think if we can get the futures to trade below the 57.95 June E-mini S&P 500 futures, and if you could see corresponding negative price action in Dow Jones and NASDAQ, I think we're on our way for level 4 top. And I'm wondering if it's not going to sneak a level 4 bottom right in ahead of the top or something, then we could have something different where it can actually drop 2 or 3 days. In other words, this level 4 was just longer and stronger than it should have been. Now we're going to have a level 4 to the downside that might be longer and weaker than it would normally be. Okay, so a big question of what's really going on here with this level 4s, but we still have this gap right in there on the futures. That's kind of unusual. I think that's a downside target. You also have the gap on the daily, weekly cash markets, okay? Bigger gap, and that's a bit unusual. To me, they ought to want to sell it. I think this is just setting up for the next round of bad news. Now, zooming out, these level 4s, we've completed a level 3 sequence well enough, and it's getting late. Okay, it's getting really late. It ought to top now, even though I thought it was going to be yesterday. I still can't give up on it. It's time to pull this down. So if it closes below 57.95, maybe that's only a level 4 swing and it might go right back up on us the next day, but it could also be the start of that level 3 down move. Another way of looking at this, give me a down day on the daily chart. We've probably got that level 3 top, and it ought to pull back into a bottom near the end of this week, and now looking like it could be even negative into the following week. And then we do have to think about the April 2nd tariffs coming up. So I'm still shopping for level 3 top, but it's getting late enough that it's making me nervous. Something isn't quite right. And the same thing for the level 4. Even then, though, it should pull back over the next few days. Even if it doesn't pull back much at all, it ought to give us some kind of evidence being on the right track. Now, when I go to the interest rates, strong, And it looks like they can go higher, rent rates can go higher in the next week even as the best forecast. Now, it may just be a last minute blip and down. There's also some concern that a lot of debt was printed in February. I would think the market has already sold that debt. And it didn't seem to affect the interest rates. But now we're rising interest rates, and I'm wondering, are they worried about future debt? Is there something going on here? So I wonder if that isn't a negative action. But I do know there's people out there saying buy the Mag 7, they're the strongest, even if for a bear market, it could be a good bull run. Well, that can force these major indexes higher, just the Mag 7 by itself. And this is the NASDAQ versus the S&P 500 ratio. It's picked its head up, but it really should pull back at least one last time here to put on a bottom that correlates with what I'm working on for the stock market. For the S&P 500 cash, something to watch out for. If it trades below 5743.69, I think that's a sign of a level 4 top, but it may be meaningless information. It may bottom immediately. What I need is to pull it back to this gap going in around 5,700. That could be a sign of a level 3 top, something more significant, and this buying is over and done with, and they're racing that day's action that looks impressive, but internally, it's really not that impressive. It's a +1 demand, so at least it was more demand than supply, but it's not +2. It's not strong demand, and they just filled this gap. It could be overall and done with, but I think what they're trying to do this morning is put it up and fill this gap, so we maybe have a problem. It's got to run all the way up into the 5830s, burn it out, and then bring it down. So I'll warn you of that much upside if you want to trade it that way, and it may be better to just day trade it to the upside, interweek trade it to the upside, but I can't trade it from a level 3 upside. I don't want it. I want to sell it, actually, okay? And trade below that 5743.69 could be a clue I'm on the right track. Trade back to 5700 would be a better clue, more evidence. But how much do you want to miss out on the downside, or how much evidence do you need? All right, and there's still a gap down here. I think this entire thing is coming down, frankly, this week into next. But I must say, there's some things here that bother me that aren't quite right the way I want it. All right, I'm going to go to the daily chart now. And we have the S&P 500, okay, at the 200-day moving average, but it's got a gap that can be filled. It ought to come down like this, a little bit at least, before going higher later. We have the Dow Jones Industrials, okay, little gap there ought to come down, but it's above the 200-day average. Lacks like it'd like to soar to that 50 or 40 moving day average, okay. But, it really ought to be going down, though, instead. So the best forecast is still bearish this week into next, or at least for some of this week. But at the same time, for the moment, I have to admit, the level 3 trend is up. And maybe best to say maybe we're missing something, and it's a much larger uptrend. This is the futures this morning for the NASDAQ 100, and it's bumping its head on its 200-day average. I think that's the 200-day average. Give me a down day. I think we're on the right track here still, and it is overbought to do it, but I'm a little bit puzzled of actually, I wanted the S&P 500 to go up to 5,700 anyways, but now that it's doing it, it's kind of like I'm nervous that it's a little too strong and giving us some problems here. This is the S&P 500 futures this morning. Turn that into a down day. I think it's better. It ought to pull back into this time frame for a bottom. Could still turn back to these old targets here and even additional downside still, but it's acting a little strong. I think what's going to occur is they're going to pull this back into a level 3, and it's going higher later, meaning we may be on our way higher for that April rally already, but I don't know for sure. It's just a little bit flaky. I think we ought to assume, to be safe, that we missed the level 2 bottom. Even if we didn't miss it, it doesn't matter. We've seen the lowest price, and the level 2 bottom is going to come in on a smaller pullback. So here's the weekly chart. We got a gap up there. I'd like to see them pull it back next week into that gap a little bit, then put it higher. Okay, and they may still pull it back for that April 2nd tariffs thing going on. On the other hand, it looks like they'd like to rally it with the hopes that the tariffs are going to get fixed. By the way, it's bounced back to the 5-week average, which is where they could sell it again. This is my estimated fair valuation, so it's just getting back to fair valuation, but I think we're still in a bear market. So I think they can pull it back and keep it below that. All right, this is the hindsight. This is the official fair valuation. So if I maintain that trend, it's actually got a little more upside. In addition, I told you I wanted to go to 5,700, knock it down, hopefully a large amount. Then by April and early May, take it up maybe towards 5,900, then knock it down a large amount. I am nervous they want to just go ahead and start moving this right up to 5,900 now. And it's not making sense to me. I realize there's some people becoming optimistic. They're bargain hunting here. There's some people that think Trump is calming down, things are quieting down. But the issue I have is, really, I look at it, nothing's really changed. The economy is still slipping, and businesses are slipping, and even those that are making lots of money are forecasting some slippage, and we've got slippage in jobs and pay. And then we still have the threat of these tariffs and global issues, and we have all the burning down Washington, D.C. I just find it difficult, but I have to admit, it may be the technical people causing this bounce because this is oversold, is turning to a buy signal. It is warning it's time to bounce. So I'm warning you, this market may continue to go higher in the week of April 14th on into early May. May continue to go higher all the way up to 5,900, okay? But it ought to set back now into early next week, sometime during that time frame. I'll set back before going higher still, okay? In addition, it may set back quite a bit actually, and then go higher anyways. That's what I'm looking at over this week into next. Some kind of a setback. Then we'll reevaluate whether we've really started that up move in April and how high. I think my gut feeling now is probably the real level 2 bottom was placed 1 or 2 weeks ago. And now we need to pull back to level 3 to kind of get caught up. Needs to pull back, allow some people to get caught up, to jump on it. And then we'll put a higher into April. And then after April, I think it comes down at least some into May, June, July. May come down a huge amount yet. So any rate, yeah, I'm starting to think this market really does now want to go higher in the latter half May, April, first half May. Really does want to go to 5,800, 5,900. But at the same time, they ought to pull it back here in the next few days. Something should go wrong. There should be another round of bad news. And even though Trump's trying to calm things down a little bit, I don't think he's calming down. I think their people are. Nothing's really changed in a sense. Any minute now, we could get some bad news. All right. So that's all I've got for you this morning. I think interest rates are going higher. The market shouldn't like it. I don't see anything changing here in economy, business, news cycle. But somebody out there thinks differently. Somebody is buying this. But I think they got carried away yesterday, and in bear markets, fast up moves often are retraced. It may take longer to retrace them than they went up, but they tend to come down. I'm going to hold out for a setback here and say this is not a buy at this level. I just can't help it. All right. If you want to go for it, granted, I do think in the latter half April, early May, we'll see the market higher than this, and it may go to 5,900. But for the moment, I think it needs to set back first. Past results are not necessarily indicative of future results. Have a great day. Thank you.